Hey everyone, it's Mike Valtos here from Orderflows.com, and today I'll be talking about my new indicator, the Valtos Transition. This is the third indicator that I've released recently. The other two was the flip and the U-turn, and I was putting them together as a three-part package, and people were complaining. They were saying, "Oh, it's terrible," but what? They didn't take the time to actually sit down and learn it. And I'm creating these videos so that you can see how it's used and examples for the entire month of January on many different contracts, with proper settings. I have a feeling people were buying this indicator and just throwing it on their chart willy-nilly, without adjusting any settings and just using a default setting for every single thing they're trading, and not taking the time to read the instructions. It boggles my mind. People will spend hundreds and even thousands of dollars on trading software and not take 15 minutes to go through a user manual, and then they wonder why they're losing money trading. I just don't understand it. But hopefully, by watching this video, this will explain it more in depth, that you can get some value out of it. So out of the three recent ones, the Valtos Transition, it's actually one of my personal favorite indicators that I had programmed. And my indicators, what they do, they're not necessarily supposed to be black box, take every single signal as it occurs, go to the bank like that. It's makes order flow analysis easier. And that's what an indicator should do, is it should relieve some of the analysis from you and do it for you. And for a lot of traders, looking at an order flow chart is boring. There's a lot of numbers, colors, zones, etc. But honestly, that information is gold, if you know how to analyze it. But first, in trading, the markets, they started out with, bar charts, simple open, high, low, close. And, then came candlesticks. People say, well, candlesticks were around for 300 years. But, in Western forms of analysis, is really the bar chart came first. And then, the candlestick charts were introduced to Westerners commercially back in the 80s, even though there were people that were looking at them back in the 30s, but for all intents and purposes, they really became popular back in the 1980s. And around the turn of the century, the early 2000s, the footprint chart came into popularity. And so you're making this big change from just open, high, low, close to even colors in your chart with if it opens and closes higher than where it opened, it's green. If it closed lower than where it opened, it's red. People are visual. That if you look at all these popular social media sites, Pinterest, Instagram, they're just, it's all images. And being able to get a good snapshot of what is happening in the market via an image, I think people can process the data better. So think of it this way. Which chart is better to look at, a bar chart, a candlestick chart, or a footprint chart? Well, look at yourself in the mirror when you're sick, right? You're sick, but you don't know what's wrong with you. So you take your temperature. Okay, you have a fever, you have a high temperature. Okay, that's progress. But to really understand what's wrong with you, you'll go see a doctor, maybe get an x-ray. That's what the order flow chart is. It's going to the doctor and getting that x-ray so you can see exactly what's wrong with you. A doctor can't necessarily diagnose what's wrong with you just by looking at you. He's going to want to take your temperature, poke you with some needles, maybe, take a blood test, and get an x-ray, because he wants to know what's going on inside that's, making you sick. So, before I get started, just go through a brief disclaimer. For legal purposes, this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. The CFTC rules, especially 4.41, state hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading, and since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. And there's a reason why the CFTC, which is a bit, sometimes I think is a bit overbearing on the industry, but there's a reason why they have that disclaimer, is because people tend to think that everything is going to be 100% accurate, and they're going to buy a trading indicator and it's just going to be hey, free money, picking up gold nuggets in the street. But it's really not. If you think that order flow will give you every market turning point with 100% accuracy or guarantees the timing of your entries and exits, you're sorely mistaken. It can point you in directions when the market's making a turn, but it's not going to give you necessarily every single turn. Honestly, nothing can. I'm not a believer in the random walk theory, where there's just pure randomness into the market, because there are times when you can clearly see changes in the market. And order flow represents the ever-changing market environment, and what this indicator, the Valtos Transition, does is becomes a visual representation of the more subtle forces at work: supply and demand, momentum, and public perception about price of the market. So what moves the market? Okay, it's basic, right? Supply and demand is, if you ask 100 people, hey, what moves the market? And most people will say supply and demand. Okay, that's obvious. But if you're looking at a normal bar chart, how can you determine supply and demand? Really, let's be honest here. If you go back to, this chart here, how can you tell what's supply and demand, what's going on in the supply and demand? You really can't. But when you look at an order flows chart, you can see the volume that's being traded in certain areas. If price is being defended or if price is being rejected, those are all signs of supply and demand. Now, you as a trader, right? You have to develop skills and knowledge to recognize changes in market sentiment. A trader will never achieve 100% total accuracy in market timing, but rather what you want to do as a trader, right, is you want to increase the frequency of profitable trades and reduce the number of losing trades. So again, you're never going to be 100% right. Anybody that claims it is basically lying to you. There's no other way to say it. But, what you should be doing as a trader is, honing your skills to recognize changes in the market sentiment. So, this is an order flow chart. And, for a lot of people, it really makes no sense, especially the first time they look at it. But, to an experienced order flow trader, it makes perfect sense. You can see that the market is bottoming here, and you can be fairly confident in getting long off this low. In here somewhere, anywhere down in here, an order flow trader would be looking to be getting long. But, not everybody has that experience or, has that skill or even that knowledge. And, that's why I create these indicators, because, I take my knowledge, I've got extensive knowledge in trading, especially with order flow, that, to me, it's second nature to look at a chart like that and see what's going on. But for a lot of people, it's difficult. It's going to take years. These people say, to become proficient in any trade, you got to spend 10,000 hours. Well, honestly, if someone told me that, I have to become proficient now in trading, I got to sit in front of a screen for 10,000 hours, I'd say forget it. I'm not going to spend 10,000 hours of my life sitting in front of a trading screen hoping to, get that knowledge. I was fortunate. I did spend that time, but that was my career. That's what I did to pay my bills. And, if I didn't pick it up quickly, I'd be working in a grocery store the rest of my life or something. And, so people say, you have to have 10,000 hours to be successful at it, to really understand it. No, you don't. Okay. And, if you can't pick up trading relatively quick, then you got to use tools that are going to help you understand what's happening in the market. And another reason why, I create these tools is for my own trading. And sometimes I miss trades because I'm not paying attention. I could be checking my phone, I could be surfing the internet, whatever. And it could be just now, I just had a sip of water. Sometimes you take your eye off a screen and you miss something. And what these indicators are designed to do is point out when conditions in the order flow meet certain requirements. And the beauty of them is I've had them programmed so you don't necessarily need to look at an order flow chart. It will run on a bar chart. So personally, I think you get most value out of looking at an order flow chart. But again, I know some people are just intimidated by the order flow chart and they would rather stick to a bar chart because that's what they use. Fair enough. And this is a tool that I think you can put on your chart that will help you. This is today. This is, let's say, February 10th. Okay, this is the euro currency 6E March contract 1 minute chart. Basically from 7:30 until almost 2 o'clock, and there was 3 signals. There's a buy here, a sell here, a sell here. Okay, so when people get these indicators and literally they come back to me, I had one guy buy it, sign up for it at, gosh, I think at around 5 a.m. and at noon, so it's not even 6 hours, come back to me complaining, saying, oh, it's terrible. And, just shaking my head. And I try to ask him, well, what are you looking at? Time for, let me help you. And, he wasn't, he didn't care. He didn't want to share or say, hey, I'm looking at this contract in this time period, with these settings. It's just, oh, this is the worst thing ever, and it just kills me because, people don't want to take the time to, learn this. I put out other videos of this, showing how effective this indicator is. And for whatever reason, people don't want to take the extra 5 minutes to, change. It doesn't even take 5 minutes. It takes 10 seconds to change the settings, or at least take 5 minutes to, reach out to me, send me an email saying, hey, these are the markets I'm looking at, with this setting, with this time frame. Should I be looking at something else? Okay, fair enough. Honestly though, I had one guy come back to me. He was looking at 15-minute charts, 30-minute charts, and I said, okay, right off that one, as soon as he said that, I said, well, it's probably not going to be very effective. I'm being honest, and I'm not trying to just go out there and get everybody's money. But if I don't think it's going to be effective in the way that you're trading, yeah, then you don't need it. But if you're trading in the shorter term, intraday, which a lot of people are, then this tool will be very effective. Like I said, this is one of my favorite ones, actually. It's like having these indicators. It's like having kids sometimes. I don't want to say I have favorites, but I got 3 kids, and I probably spoil my daughter the most. Although I spoil them all, but I noticed that when I do shopping for things for them, generally it's the girl that comes out ahead. Even my wife gets angry at me sometimes because I don't get stuff for her. But anyway, so one of the reasons, getting back to the reasons why I create these indicators is, because the problem many traders face, and I'm guilty of it, sometimes knowing how to interpret a signal is never easy. I might find myself looking for a trade when there is none. Sometimes the market is just slow, and and I really am kind of, I'll say, anxious, but you know what? I can sort of read a little bit more into something that's not necessarily there, and especially if the market's going sideways. And so having an indicator that sort of meets a minimum requirement for me in terms of volume activity and what's happening in the markets, then it will help me find more trades, because I could watch more markets rather than sit there trying to stare at 20 different, again, I don't say go out and trade 20 different markets. Honestly, I've got about 4 markets on my screen at any given moment that I'm concentrating on. But because honestly, it's well, if you're just watching one market, there's people, they have these ideas like, oh, you got to just learn one market, learn it inside and out, everything that's about that one market, and you'll be successful. No, because there's gonna be times when that one market is just dead. And when I say dead, I mean it could be quiet for many months. Corn is a perfect example. There's times of the year when corn is very active. There's times of the year when corn is watching paint dry. You have a 4-cent range all day, and how are you going to make any money? You got to move to other contracts. That's how, back in the days when there was the pits, the trading pits, people would venture when one pit was quiet, but another pit was active. The guys in the pit that was quiet they realized there's not going to be any, chances are there's not going to be any action here today, and they would walk over to the pit that was active and try and get involved. And sometimes that's what you got to do when you're trading. So what I did was, I took my strongest methods of order flow analysis. I've got quite a few, but I realized, when I go over the trades, that there's certain ones that appear more frequently and that are generally more profitable than others. So I've been in the process of getting them programmed over the last couple of years, and this is the latest. It's the Valtos Transition, and it looks for times when the supply and demand factors are changing. And how does it work? Well, it compares the volume and delta changes over a period of time. Again, real quick, this is a DAX. This is, I don't know what day this was, the 8th, 2 days ago, Wednesday. 1 minute chart. Again, not a lot of signals, but you had a nice buy here. Well, this is after the cash close in the DAX. So it's following the US market. DAX is a decent market to trade once the European cash session closed, because at that time it's sort of a slave to what the US market's doing. And if the US market's moving in one direction, you can generally get some nice trends. So here's a nice buy, it shot up. Here's another buy, it shot up. Here's another buy. Kind of went down, probably would have stopped you out before shooting up. And then it gives you a buy and it goes nowhere in the next bar. This is a minute chart, and then it just jumps right up here. Then you get a sell, and again it goes lower. So it just kills me sometimes. People don't want to take a minute to shoot me an email saying, hey, what setting do you recommend? Just give me my money back. Whatever. Honestly, I get a lot of more positive emails than negative emails, and I'd rather deal with the positive people than the negative people in the world. I mean, there's always going to be people that are unhappy. I worked with a guy, and he just disliked me. I don't want to say hated me. I'll just say disliked me. And I could literally walk into work and say, good morning, to everybody. And then I say hi to him, and he'll be upset. Oh, you said good morning to everybody else, but you only say hi to me. There's people like that in this world. And it just, it's one of the earliest pieces of career advices I was given, was by this guy, Larry Molnar, who, he was the head of Dean Witter Futures. And in a little bit of history, he was John Henry's buddy back in the 50s and 60s. They really worked together, and Larry Molnar actually helped find a lot of the money for John Henry to be trading with. But he gave me this advice: says there's going to be people that you get along with. There's going to be people you don't get along with, and no matter what you do, you can't please those people. Might as well spend more time with the ones that you get along with, and develop those relationships, because that's where your relationship is. You're going to grow more as a person when you're talking with people that you get along with, rather than trying to fight people over things. So that's why I put these out, because even though I do get negative emails, I do get positive emails from people, and that very appreciative of these videos that I put out. That's why I put them out. And I said a lot of this information, I just put it out there, and I get emails from people saying, hey, what, I use this other, they don't use my order flow chart, they use a different one, and they say, they spent thousands of dollars on these other software and they don't make sense. And then they watch my videos and it all makes sense, and they're very grateful. And at the end of the day, that's my goal, is to help people. So, these are the settings that I use on my charts right here. On my trading system, it's 3, 400, 100. You can see it here, 3, 400, 400, and 100. I'll get into what these mean. So the period to look back is 3. The ratio balance 1 and 2 is 400. And the max balance volume is 100. And, let me explain. What these settings are is, how far back to analyze. A setting is 3 bars back. A setting of 10 would be 10 bars back. So if you change the setting to 3, it's just going to use its analysis over the last 3 bars. Now, with order flow, it's very rare that I really look back 10 bars, 20, I'll say 10 bars, anything more than 25 bars. In one of the other indicators, I use a setting of 50, which takes into account where the market's been over the last 50 bars. But for this one, where I'm trying to pick up changes in supply and demand, I'm really more interested in what's happening now rather than what's happening a bit later. In that one other indicator, that's really the only time I would really look back over a wider period. And part of the reason for that other one is, it's more to filter out some of the fluctuations in the market. But for this one, 3 is fine. You could try 5. I wouldn't probably go over 10, but I'm fine with 3, fine with 5. And if you don't want to use it, you could change this from true to false. The number 4 on, you could change it to false. And then you won't have to worry about the period. Then the ratio balance 1 and 2 is 400. And what those numbers are, it's a ratio change from supply and demand, or demand to supply. Keep it at 400, which means it's going to be 400%. So the change will be 4 times as great. And you could try 500. For a while I was using 500. I use 400 because that's what I'm most comfortable with. And even when you're looking at imbalances in the market, market imbalances on a footprint chart, the standard that people use for that is 400% as well. So it's it's a decent number. I said you can make it bigger. And, if you make it at say 900 or 1,000, that'd be 9 times as great, or 10 times as great. Of course, you'll have a lot less signals, and I don't know, honestly. I haven't run the test on them to know if it's going to be any more effective. Maybe one of you guys will find the time to do that. I'm extremely happy with 400. For a while I actually used 300, but as well. But 400 I'm comfortable with, and it makes sense to me. The max balance volume, which is this one here, max balance volume, is it's a volume number that goes into the equation to determine if there's being a shift in supply and demand. All right, normally when a market, if you're familiar with the term absorption, right? What's absorption? It's when the market sort of contracts, and you trade around value for a while because everyone's happy trading at a certain price, and you don't get much price movement. You're sort of trading in a range, but your value area is pretty tight. How to say it better? You're not going to have necessarily big changes in delta, because buying and selling will be about equal, right? When you're in an area of absorption, buyers and sellers are evenly matched. And what this max balance volume measures, it's measuring when buyers or sellers are roughly around evenly matched. I mean, you could make it bigger. I like setting of 100. I'm comfortable with it. I find setting, if you go 500, obviously you'll get a lot more signals. If you set it at 10, you'll get a lot less signals. But a 100 for me is a number that actually works with pretty much every contract. I've tried 50 before on thinner contracts, but there hasn't been any major noticeable difference. And the noticeable difference is when you get into much higher numbers, especially on thicker markets. And again, if you're trading U.S. products, trade during the U.S. hours, ideally 7 a.m. to 3 p.m. Although I did just show you a DAX, which is after the cash close. In Europe, well, I think it was all after the cash close. Let me see, at 10 o'clock. European cash close is around 10. But again, but for U.S. products, it's ideal to trade them during the U.S. hours. The DAX, there's a lot of ARB going on between the DAX and the E-minis. But again, for most contracts outside of those times, you have less volume. as the underlying cash markets close. So the moves are based on other unrelated fundamentals. So as you can see, that DAX trade, those DAX trades, the market is really following what the S&Ps are doing at that time. So again, times to trade. I can't stress this enough. That's why I keep this slide in all my presentations, because people either don't listen or don't care. But be careful trading around data releases or announcements. For example, the unemployment number or Fed announcement. Volume will dry up, and you get quick moves back and forth in one direction. And sometimes in seconds, you could have, literally in 2 seconds, you could have 10 bars print. And as a result, you're going to get chopped up or your head cut off if you're on the wrong side of the market. If you've ever traded and you tried sitting through some of these numbers, you know exactly what I mean. It's one thing to be paper trading during the number and you suffer a loss, you don't really care. But if you're trading real money and you're sitting through a number, and next thing you know, you got long S&Ps, and all of a sudden it's sold off 10 points against you in a matter of seconds. By the time you go in to cover it, you're down 8 points. You'll be very upset, and you'll sit there and say, "Why do I trade?" But don't trade around those time periods. There's nobody holding a gun to your head saying you got to trade around the unemployment number. You got to trade during a Fed announcement. You don't. Okay, so it's just better to sit out and wait. Part of being a successful trader is being in, having the ammunition, so to speak, having the funds to trade when the opportunities occur. And if you're going to be taking a risk, during a very volatile time, then, there's going to be times it does work out. There's going to be times when it doesn't work out. The only difference is during those times when it doesn't work out, it blew through your stop, and, all of a sudden instead of taking a 2-point loss, you're taking an 8-point loss because of the volatility and the lack of liquidity. So it's just best to wait for when the market's back to normal and everything is proceeding as planned. So, let's go take a look at the settings. I'm going to go over a bunch of charts again for the month of January. And these settings are actually all the same in this case. It's 3, 400, 100. Now the default settings that come with the software, change them. All you got to do is you just click on the chart, open it up, go into this thing here, change 3, put 3 there, put 400, put 400, put 100. That's all you got to do. It'll take you less than 20 seconds to do, and just save it. Save your template. So let's go run through a bunch of charts from early January, first week of January to the first week of February. Okay, so we'll start here. This is a 1 minute chart in the euro current. Let's see, 6E, yeah. And notice the settings: 400, 400, 3, and 100. Let me just get this. I'll make it smaller so it's easier to see. Okay, so again, I'm going to show you whatever I can show you. Again, these are US hours. These charts are set from 6 a.m. until 3 p.m. So let's see what we got. This is, what day is this? First one. Well, this is the second day, is the 4th. So this is the 3rd, January 3rd. Okay, just, got a little move up here, nothing here. Stopped you out maybe there, nothing. A little move lower. Again, these are very scrunched up. This one sideways. Next day, this is a nice move up. Here's a nice move up. Here's a little bit of a move down. This one didn't work out. This one, I should make that bigger so it's easier to see. Okay, yeah, it didn't really work out. This one didn't work out. This day was not that great on a 1 minute chart. Next day, you get a nice move down here. Get a nice move up. Nice nothing here. Get a little bit of something before you get a buy signal. It goes back up. This one didn't work out. Here's a nice little move lower. Again, a nice sell signal. Kind of went up against it before selling off. This one's a little bit close to the close. It's non-farm payrolls again. You're not going to be necessarily taking this trade, I don't think, at 7:15, because it's 7:15. You're thinking, if I got to hold it for 15 minutes, I got to run up into that number, and which is like a chainsaw. You can see the volatility there. Wait for the market to settle down, and it did later. You got this sell here. This one didn't necessarily work out, but look at this. Came right back with this nice sell here, and say you missed this trade again, you got another entry here. And look at that. You're talking around the 106 level down to 105.60. You get a little buy there, and a sell here coming in after 2. Euro currencies, be careful trading it after 2 o'clock Chicago time. The liquidity really dries up until the Asian session, especially on Friday. Everyone in New York's gone home already. This one didn't work out. Then here's a nice, it went up, then came back down, and then went back up. This one's a bit choppy. This one failed. This one failed. A little bit later, little winner here, nice little winner here, another long signal there. Nice sell there, buy here. Again, this is iffy. If I'd be looking to take it, it's right around the 2 o'clock close. Here's a down move, up move, down move. Nice down move, up move. That didn't work out. This did, this did, this did. Well, I don't know. That's kind of sideways. Probably getting near your stop. I know some people will say, oh, you see, again, these are US hours charts, so it doesn't show the night session. But I'm sure there would be, there's some vendors out there who will say, oh, you see, you could have sold it here at 1:30. Come in the next day, look where it's trading. It's 50 points lower. That just kills me. For people that trade intraday, they're not going to do that. Who wants to sit up all night long sweating out a position when, you got plenty of opportunities during the day to sweat out a position? Big money is made overnight, but, you got to decide what type of trader you're going to be then. You're going to really blow out your risk, your risk parameters if you start holding positions overnight, especially these currencies. If some central bank somewhere does something, it can move quite swiftly through you. Just look at what happened with the Swiss franc a few years ago, 2014, January. It wiped out, nearly wiped out some futures foreign exchange brokers. And all of a sudden, guys were getting these margin calls when they didn't think they'd ever get a margin call. So, okay, this one didn't work out. This one not really. This one did. This one didn't. This one did before it failed. Here, I don't know if I would have stopped you out. This one didn't really work out. Again, I'm not going to say, oh, you could have bought it here right after the close and hold it to the next day and it's up there. That's just not prudent. I don't know. If you want to stay up and manage it, okay, but I'm not saying you would do it and hold it. And this one kind of went sideways. This day, my data was kind of mixed up, I remember. So I can't really analyze that day properly. Here it went down a little bit, up, kind of sideways. Here's a buy that didn't work out. This one kind of just goes sideways. Here, this one started moving lower. This one didn't work out. This one, nice move up, gradual, slow move up, methodical, then starts working its way back down again. This one, kind of just sideways in both here. Then you get another sell signal here, right ahead of this. Again, this is 2 o'clock. That's why sometimes you see in the euro currencies, at 2 o'clock you see quite a bit of activity. Okay, so here's a buy. It worked out. Here's a sell. Kind of nothing really. This one sideways. This one, yeah, that one worked out, I'd say. This one, it's going to one of these cup formations. Started to work out, then moved against you. This one didn't really work out. That's already close to 3 o'clock. This one's a little bit early, 6:30, but it worked out. This one, no. This one, no. These kind of sideways. This one failed. That failed. This one sort of just ran into all this chop up there. I don't know what happened. I can't remember what happened on the 20th off the top of my head. That one didn't work out. Okay, oh, here you got a nice move lower. Coming to this buy. It didn't work out. You got to sell here. It did go down. This one would have stopped you out. This one, it's a nice little trade here. It's a nice little trade here. It's a nice trade going up before it comes back down. That one didn't work out. You made this little move up, then you get the sell signal, and then go sideways. This one, not really. This one, not really. This one, not really. This one, these are just sideways. A lot of these trades here. Okay, that's a nice trade there. Here, it probably would have stopped you out. You get these markets just going sideways on you there. What do you got here? You got a nice move here. Nice little move there. Yeah, maybe break even. Nice little small move there. Sell here. Sell here. Oh, this little buy here. This sell just sideways here. Kind of sideways. Sideways there. Okay, where are we? March, sorry, February already. Yeah, maybe small loss here. Break even in here. There's a loss here. Here we sort of went up. Here you went down. This next one kind of lower, sideways to lower, up, down, up. And that's after 2 o'clock. The second, this is a nice, I'm not saying you take this trade. It's right on the open. Generally, I start my charts at 6, but sometimes I don't actually get all the data coming in until 8 for whatever reason. Sometimes I'm rushing to open up my trading system. This has been the last busy couple of weeks. I've been literally all over the place, and so that's why some charts have missing a little bit of periods, or there's 1 or 2 days I wasn't even trading. But again, I'm showing you all these different charts because I want you to see how it is, how it looks on different charts, different time periods and settings. In this case, though, the settings are all the same. So this one, again, I don't think I would have taken that. Here is a nice, here's a nice sell, and it's just under pressure all day. Again, you just get the confirmation there to be short. And all the way down in here where you start seeing some buys. So that's a nice day. You only had to take one trade. Now this is the non-farm payroll day for Feb. Again, I wouldn't be taking any trades right ahead of there. Sometimes I do, but most of the time I don't. But this one, 8 o'clock around there, the market's sort of quieted down. That's a nice trade right there. This one didn't work out. Then you get another buy here, and look, it's just straight up there. Then you get some more signals later. This one didn't, it sort of worked out, then sort of came down. Then you get some sells here, when it went lower. This one, again, sort of the same as what you had here. Started out and then just fell off. And then, again, it's Friday afternoon, already getting into the close there. Even though it did just sort of go sideways before turning up. So that's the 1 minute chart. I'll show you this. This is the 8 range real quick. Again, I'll try to just blow through these. So, again, I don't need to hold your hand on it. Even you guys can see it and, and decide for yourself if it's good or not. Okay, so this day there was nothing. There's some nice moves in here, some small swings in here. This is an 8 range chart, so difference with with range chart obviously and minute based charts is because a range based chart is the price rotating back and forth, whereas a minute chart is the bar ends because it's 10:05 and then the next bar starts at 10:06. So the fluctuations are different. That's why 8 range in a minute, an 8 range chart and a 1 minute chart look a lot different. So on an 8 range reversal chart, it's going to print 9 ticks because you got to go with that extra tick to complete the chart. So if you see 1 bar, so even if it moves 1 bar, you're already talking 9 ticks. But sometimes you get, when the beauty of a range chart, sometimes you get these nice clean moves like this because the market is just moving in one direction. Like here's a nice move up. This one didn't work out, but you should have been alert to catch this first move here. People will say, well, this one didn't work out, it sucks. Well, did you catch this one? No, I didn't, because I don't trust it. Well, when you start trusting how you're trading, you'll be taking more signals. So here's this, again, it's nice. But anyway, I'll just try and run through these so you can see. I don't need to comment on everything. You're intelligent. Okay, this day here is 2 signals. They both failed. Okay, there will be days that no matter what you do, you just you take a loss. I mean, it's unfortunate, but those days happen. But again, you just want to come back the next day, still have faith in what you're doing, and get some stuff. Start covering it back here. This one didn't work out. This one sort of did a little bit. This one gave you something. Again, these are 8 range charts, an 8 range chart. So 1 bar is 8 ticks, 9 ticks. But if you stuck with it, you could catch a nice move here, a nice move there, and you'd be covering back a lot of your losses pretty quick. Might not necessarily get it all back in one trade, but stick with it, and you should be able to get it back. And again, would you be willing to take a couple small losses here to catch this move here? Some people don't. They don't want. They want every move like this. They're unwilling to take a couple of small losses. You just got to decide, what kind of trader are you? These are the nice days where it's just one signal and it's just all down after that. But those days are rare. So this is the non-farm payroll. Again, I wouldn't be trading here at 7:30, but at 7:40, that's fine. You could take that trade. If not, this one didn't work out, but then it came right back here with a nice trade that worked out. So even if you said, I got to wait till 8 o'clock to take it, and then you get a loser here, if you stick with it a little bit later, you got a nice sell here. So, it worked out. Okay, what next? NQ. I got NQ charts here. This one here. 1 minute chart in the NQ. I don't remember how this looked, but we'll take a look, go through it. Okay, what do we got here? This starts on the 3rd of January. Again, the NQ is a contract you really shouldn't be trading until the cash open at 8:30 Chicago time. That's when the NASDAQ opens. And you can see how it really picks up activity after 8:30. Here you got very small bars doing nothing, and you can see how it is afterwards. So here's a nice sell. I don't need to explain that. Again, try and restrict your NASDAQ trading to the cash after 8:30 when the volume picks up. What do you got here? Yeah, some little sells that work. The buys not really. I mean, it's depending on what your profit targets are. These didn't work, but again, that's 7:30. 8 o'clock. Again, it's right ahead of the cash. I don't know if you'd taken it. If you did, you would have been greatly rewarded. Some small trades there. kind of mixed. Okay, so yeah, it didn't give a signal here. Some people say, oh, it didn't tell me to buy here. It's terrible. Well, sometimes there's nothing in the order flow necessarily giving it away that you should be trading there. You know, some people think that every high or low is going to be picked in the order flow. No, it's not. You know, sometimes the market just makes a natural low or a natural high. You know, here's a nice little move. This one didn't work. Here's a nice little move. Here's a nice little move. Here's a nice little move. Some nice little moves. A little bit. Let's go sideways. Again, yeah, some nice. This is nice. After 8:30, you got sell, didn't work out, sell, didn't work out, and you know, buy, and it worked out again. You know, maybe you took a couple small losses in here, but you know, if you stuck with it, you're rewarded. You know, look at that, bing. You know, nice move up, nice move down. You know, didn't work out there, but you know, this one gave you something. This one, you know, maybe you scratched, maybe you lost a tick or two. You know, the scaling on this, these look small, but you know, really gotta expand it. But if I did, then it'd be like very difficult to go through all these very quickly. You know, this day is kind of mixed. You know, here's some nice little swings. Some nice moves there. Yeah, this one failed, but you know, you got a nice winner there. You got some nice little swings here. Yeah, again, that's a nice like cascading move there, but it's a little bit close to the close. I don't know if I'd be interested in it. There's a nice move up. Nothing really. Some nice, you know, this one didn't work out. It started to, but then it failed. I don't know. Maybe you could have, if you traded it correctly, maybe you got something out of it. Then, you know, these are just all in your favor. This one here didn't work out. And non-farm payrolls here. You know, again, it's setting you up with some decent trading opportunities, some decent entries in here. So what is that? Okay, so we'll go to the NASDAQ 8 range chart. Again, all these settings, it's 3, 400, 100. It's all the same. Not using any special curve fitted numbers, you know, that, oh, this market, you gotta look at this one, or this market's got to be set to there. No, these are the same numbers. You know, in this case, it's dealing with ratios, so it's fine to be this around the same. So again, you know, here's some nice little cells here down. That one just went sideways. That went lower. Try and blow through some of these charts a lot quicker. This one didn't work out. You know, usually I don't necessarily talk about the ones that worked. I just show you the ones that didn't work is what I'm more concerned with. Because I don't want you thinking that every trade you're going to take is going to be a winner. No. But you can see the types of winners and the types of losers that you have. Yeah, I just wanted to talk about this real quick. For some people, it's probably prudent for them to trail their stops, to at least lock in some profits. And, this is a perfect type of indicator that you can do that on. You get these moves that go up, then they start turning on you again. Moves that go up start turning on you again. But if you're trailing your stop, at least, you're getting out somewhere up here rather than down in here. That's nice right there, right? This one failed. This one failed. This one, nice winner, gets back what you just lost over those last couple of trades. And it comes back with sort of a loser and a loser. This one's kind of mixed. You get what you will out of that. It's a nice one. It's a nice one. Nothing. Just a nice move. Some nice little moves there. That one didn't work out. This one, probably not. It's a nice move there. Again, there's a little something here. And a nice move here. Okay, so that's the mini NASDAQ 8 range chart. Now let's go to a mini Dow 1 minute chart. Again, same settings, 3, 100, 400. Mini Dow I like. It's a nice contract to trade. So this is the day the market's just dropping off. It's giving you a buy here, failed, a buy here, that failed. You know that it's failing pretty quick. So that's a nice thing, I guess. And then here's a buy that started to work out. Then you get a nice sell signal here. So hopefully at least on this trade, you could have made back whatever you lost on those previous trades. But again, people, oh, look, the market just dropped like this. It didn't give me a sell signal. Well, there was no sell signal to give you. That's a nice one, but still, these are some nice gradual moves here. But this market's really going sideways. That one didn't work out. Oops. Some failures there, kind of a failure there. Then it worked there, and a nice trade there. So again, you gotta stick with it. If you just give up, oh, I had a loss here, I had a loss here, I had a loss here, I give up, I'll sit it out. Don't sit it out. Because if you sit it out, what you're gonna do is you're gonna miss this trade. And say, oh, okay, I'll sit it out, wait for it to start producing winners again. And then you're gonna miss these two trades here to get back everything you just lost. I mean, sure, I understand the logic that, oh, well, if I don't sit out, I could take more losses. Well, if you're not willing to take the risk, you shouldn't be trading. It's like the baseball player gets up to the major leagues and he just sits up there with the bat on his shoulder when it's time, when he's at the plate, and the manager just comes back, says, you got to swing. You'll never stay in the majors unless you take swings. Okay, some small winners there. Nice gradual move up, nice gradual move down. Whoops. Again, I'm trying to show you as much as I can. Show you stuff like this where it doesn't really just sort of spin your wheels. Because you got to see that. You got to understand that. Again, can you sit through this? Chop in here. This one going sideways. And then you're just sitting there laying in wait for this move from 19,840 down to 19,790. That's a 50-point move right there. Then you get some nice little moves here as well. So sure, you had a couple of losers, but then you had some very nice winners. I'm not even going to say you had to sell it here and hold it through that big drop, but I don't want to get into that. But in here, you got some nice solid trades here. Sort of go through a little bit faster so you can see some of these trades. I don't want to keep you guys here too long, but again, I want you to see how it performs over time. And I think this is the best way to do it. Looks better when you blow it up, expand the chart, but still. So when you're just looking at a chart that looks like it's going sideways, it doesn't look as nice. Again, some nice solid moves here. I don't know how that's going to turn out. But over the next, this is when the cash opens here. This is before cash. This is after cash. Get a nice little move there. I don't know if you really would have got much out of this move, honestly. You'd have to be very fast. What's a 1 minute chart so you can act responsibly. But back there is the cash, non-farm payrolls. Anyway, that's the 1 minute chart. Let me see if I got a range chart in here. I'm sure I do. Again, 8 range, mini Dow, same settings, 3, 100, 400. Okay, let me just jump ahead to the E-mini 1 minute chart. Just want to see what we got. Again, it's still the same settings. 3, 100, 400. Now the E-minis, it's an interesting contract because it is liquid. It's a viable contract you can trade, from European Open. I mean, the volume that it puts in during the European session is, a lot of contracts would like to have that during their main session, actually. But anyway, let's see what we got in here with this setting, the same setting. I mean, again, these settings are not set in stone. You could always adjust them. This is a more liquid contract, so maybe you might want to adjust that this setting here, this one, the 100, the max balance volume. Maybe you could blow it out to try 200. Give it a try. Give it with some different numbers. Again, these numbers are not set in stone, but if it's not giving you any signals, it's something that depends on the volume. And if the market's puts in lots of numbers, if it's a thick market, when I say puts in lots of numbers, what I mean is if it's got, if it trades a lot of volume, and if you're using a small volume number like 100 on the E-minis, maybe it won't give you that many signals. And I'm just looking through it here. I don't see any so far. This is already a few days. I know there's some. I saw some on some chart, but I mean, I know this is, in the E-minis, when you're looking at a volume of 100, that's nothing, on a 1 minute chart. Some of these bars, I know, got volumes of 8,000, 10,000. So it's going to be very, very rare. Let me just scrunch it up a bit more. Let's see if there's anything. Nothing yet, really. Yeah, so there's nothing. I mean, a volume of a bar, the volume of 100 is very small for an E-mini 1 minute chart. So maybe on that, you could probably blow it out to, a couple hundred or, 500 even. Try it. Part of being a trader is finding what works for you, what you're comfortable with, and, going with it. I mean, don't think that, even though, Tony Robbins, the great motivational speaker, says go find out find someone successful and see what they're doing and copy it. Well, in certain businesses, yeah, you can do that. Like say internet marketing or making money online or bodybuilding, you could copy it almost exactly. But with trading, there's a bit of a personal journey you got to go through and find what works for you that you're comfortable with in trading. It's not just copy exactly 100% what I'm doing and you're guaranteed to make money. No, no one's going to be able to copy 100% because there's things that I have locked up in the back of my head. I don't even know they're there, but when the situation arises, it comes to the front. And unless there's a way to suck everything out of my brain, you're not going to know everything that I know. And again, I'm not trying to say that in a braggy way or anything. I'm just saying there's things that I don't even know that I remember. It kind of doesn't make sense, but I think you'll understand what I mean. You can't copy somebody 100% on everything. Just like cooking, you work with a brilliant Michelin star chef, doesn't necessarily going to mean you're going to be a 5-star chef as well. There's things that he knows about how to cook, how to cut a fish a certain way, or how to, how to prepare something that, sometimes it just doesn't get translated over to you, even if you've been working for him for 20 years. So anyway, this is the E-mini 5 range chart now. Now you see a bit different, now you're seeing signals, whereas on the 1 minute chart, you didn't. Some of these work, some don't. But, it's a starting point. Again, are you willing to take a small loss here to catch this nice trade here? Again, maybe 100 is a bit too fine, a smaller number. You should probably maybe blow it out to a bigger number. But again, it's something that you can test. When I get time, I'll test it. So, the 1 minute chart, there wasn't that much number. So that was a 5 range. I'll go to look at the 5 year real quick. 1 minute chart. So this will be the last chart that I'll go over. Again, part of being a good trader, successful trader, is doing the work yourself, research yourself. We all like to have things handed to us. I mean, I know I like to on certain topics, but, at the end of the day, you still got to put in work. You still got to put in effort. Things don't always come easily. So here's a 5 year chart. Roll it up again, again. So, here's some nice trades here. 1, 2, 3. I think earlier people say, oh, you didn't scroll back to the beginning. Okay, so yeah, I didn't get all the way back here, but still, it's a nice move up, it's a nice move down, nice move down. Some nice trades there. Some nice trades here. This one, Nice move up, nice move down, sideways then down, nice move down. A bit difficult in there, but you could have got something, I think. Non-farm payrolls, for this market, the 5 years, you see how volatile it is. So, be careful if you're trading around that time. If you're getting into a trade here, probably don't want to take it. You really get a nice setup. You just wait for something when it calms down here. Gives you a little something here, gives you a little something. Looks a little better here. Some nice moves here, nice moves there, nice moves there, nice move there. This is a market where if you could scalp a few ticks, that's great. You can be in and out, margin a couple $100. You could trade 5 lots. You make a few ticks, although one tick is only like $7, 7.81, $7.81. So, it's questionable whether if you're trading 10 lots, that's $78 a tick. You make 3 ticks, it's $200 right there. And you're getting some nice signals. Again, I'm not advocating that you do. I don't want someone to go, oh, you told me to do that. No, I'm just giving you options that you can do it. People always talk about, oh, I'm paper trading. Why? There's these contracts out there that got low margin. The experience you're going to get from paper trading versus trading with real money is not even comparable. When you have skin in the game, so to speak, when you have money on the line, your decision-making process is completely different. You'll be thinking differently. So when you're paper trading, you don't necessarily get out when you should get out. You hold positions longer and you take stupider trades. Well, I don't say that, but sometimes when you're paper trading, you think, oh, that looks bored, I'll take it. If you're trading real money, you might not take it. So it's night and day. And you could open accounts for a few $1,000s and, just trade 1 lot. No one says you got to trade 10 lots right away. If you can't make money with trading 1 lot, you sure as heck ain't going to make money trading 10 lots. Nice moves here. Oh, people send me an email. Oh, I bought here and then it sold off. You suck. Whatever. Then I'll say, did you take this trade? No, I didn't because I lost on that trade. Well, should I have a stop in place? Yeah, he said you could only tell people certain things. Again, I'm not complaining, but you know what? I mean, people come to me, they want to learn, but they don't want to actually put into practice what I teach them. Whatever. And people come to me wanting to learn certain things, and again, I teach them what I think they want to learn and what I think is useful to them. Again, these are some nice moves here. This one doesn't work out. Nice move up. This one, nice move down. And this one doesn't work out. This one does. This one doesn't. This is kind of a scratch in there. You could have got something here. This one, nothing really. That's 230 already. It's a nice one. It's a nice downward action. All sells there. Sell here. This one didn't work out. This one, sideways, sideways. Again, I'm not going to talk about this because it's right ahead of the close. This is just right after the, again, it's 6:30 in the morning. I don't know if I'd take it. 7, yeah, I don't know. Maybe. Definitely not here. But here, maybe I'd be interested. But it didn't work out. But came back with the sell. Didn't work out, but it came back with the buy that gave you a little bit of something. And this one definitely gave you something. This one didn't really work out. This one, well, again, I don't say, yeah, you would have bought it here and sold it up here. Honestly, I would have taken this one probably up to somewhere in here. Start coming down, I would have got out. I'm not saying I'd take that, and definitely, I would love to, but I'd love to have gotten a buy in a little bit closer in here, like here, rather than down here. Because, it goes up. It's a minute chart. I'm not looking to hold it for over an hour on a minute chart, even unless it's really, literally straight up. Whoops. Thing there. So there's a sell here. Went down. Nice little sell. Nice little sell. This one failed on you pretty quick, so you gotta have a stop in there. Could have got something back there, hopefully. And definitely, if you didn't cover back what you lost here, you definitely could have covered it back there. Again, you gotta have stops in. You don't want to be buying it here, taking it all the way up there, then getting out down here. Trail your stop. Trail your stop. At a minimum. Here's a nice trade, followed by a nice trade. This one didn't work out. Again, this is right on the close. That's right on the open. Sideways. That one stop you out. Sideways. Non-farm payrolls. Again, you're not going to be taking this trade because you could be looking at this and So after the market calms down, a nice buy here. Sell, not really work out. This buy did. This buy did. These sells worked out. This buy, not really. Sideways. And these are already Friday afternoon, 2 o'clock. Not interested. So, again, these other settings, try and keep it during U.S. hours. I went through enough markets for you guys to see this indicator in action. Make the decision yourself if you think it's useful to you and something you could add to your trading. I do think it's a great tool, and I do think it's underutilized and misunderstood by people out there. But by adding it to your trading arsenal, it's going to give you some trades. Honestly, sometimes it's a numbers game. You got to be in the market. You got to have something giving you signals to trade. Otherwise, you're never going to take a trade. But it's a good starting point to, get your feet wet with order flow and understanding supply and demand shifts in supply and demand. So thanks for watching this, and hope to see you on the inside. Bye-bye.